Hello there.
Hello everybody and welcome. Christmas is here. I hope you're all on holiday having a wonderful break with your loved ones. Thank you so much for joining me today. This week we're going to try and decide between two Christmassy themed stocks. The first is Coke with its iconic year-end Christmas advert, and the second is Games Workshop because, I don't know about you, but I'm a bit of a nerd and I always am happy to receive Games Workshop merchandise for Christmas. It's always on my list at the very least. So this week, let's talk all things Christmas, catch up on our portfolios and see how we're doing. This is Battle 17. I'm the Gentleman Investor. Let's invest. As always, we're going to reveal who won last week's battle. We're going to check in on our portfolios and we're going to battle two more stocks against each other. Without further delay, let's get underway. Last week we pitted the nuclear stocks against each other and it was really close with only one vote separating them. In fact, there was even a third contender with Vistra being recommended in the comments. And although it might have been the best one, it only received one vote, so lost out to the winner, which this week was Renew. Right, let's take a look at how our portfolios performed last week. By way of reminder, it's £25 into each of three portfolios. The Battle Royale, where you tell me which stock to invest in. The Benchmark, where we compare how that portfolio is done to the market. And finally, £25 into the Income Generator, which aims to earn dividends to be paid out to a lucky subscriber every 6 months.
And this is how we've done last week. As you can see, red everywhere, but if you're following an investing channel, your funds will have been looking pretty red too, thanks to the Fed. The Income Generator faring the worst of all of them, so let's hope it's paying us out lots in dividends this week. The Benchmark beating the Battle Royale. The Battle Royale's been performing pretty well and beating the Benchmark most weeks, but this week it has well and truly been beaten by the Benchmark. Let's see what the total standing is overall, and let's see if it's still above the Benchmark or not. Here are the biggest movers of the week, and as you can see, it was a tough week indeed. Only one mover in the green, and the worst performer, YouGov, down almost 10%. That is a phenomenally bad week. And here's another view of the Battle Royale. I wanted to show you just how far it had fallen. And now that we've got 15 holdings, I mentioned that there was only one in the green over the last 7 days, which was on the beach, sorry. But just look at all of that red. That is painful. Not a single one. And even our best performer that I'm afraid I've been mentioning each week because it has such crazy volatility, Tesla, down 3.5%. Look, I'm still up 93.8%, but that is a big fall for the week and just so much red. Let's hope next week is a better week. Okay, so the Income Generator performed particularly badly on the growth side, but on the dividend side it's now up to £11.26, up from £10.52, so that's exciting. Next payments £2.21 and £2.01 respectively, so we're up to £4.22 to be paid out, which is up from £3.94 last week, so that's actually making some nice progress. And the final part of the portfolio updates, this is how we're doing all time. And yes, the Battle Royale is still ahead of the Benchmark, actually quite comfortably at the moment, although I don't expect that to always be the case, particularly with the volatility in the stocks that we've chosen. But we're still up 10%, so very happy with that. Benchmark took a big hit this week, down to 2.76, and worryingly, for the first time, one of the portfolios is in the red overall. We've lost money. Even the next 6 month payments of £4 is not enough to cover that £6 deficit, but as it's paying out 11.26 over the year so far, we're technically counting our chickens into the future, if you can use that as a phrase, ahead. So all good in the investing world on this end.
3, 2, 1, fight.
Coke is an absolute classic. If you've ever followed anything by Warren Buffett, you'll know what virtues it has, why he likes it so much, and why it's considered a defensive stock. Hopefully it's going to be around for a while. They are making good moves, nice and sustainable in terms of keeping their product and their margins ticking along. Games Workshop, I'm sure a lot of you have heard about it. It's been quite a popular UK stock. It's going from strength to strength, and they've just confirmed an Amazon deal that's of course fully priced into the market, but it's going to be hitting everybody's TV soon. And as a fan myself, it's going to be a very exciting time, and it's going to be great fun watching that stock grow, hopefully.
Okay, so everybody knows Coke, but for those who don't know Games Workshop, well, this is it. This is the Warhammer section of what they produce, and they produce multiple different fantasy worlds. Warhammer 40,000 is probably the most famous one, and basically they sell these little miniatures or models and for a fortune. As you can see, this little Adeptus Sororitas battle force costs £150. They also do Lord of the Rings, Age of Sigmar, a whole bunch of other fantasy settings, and they of course do books, and as I mentioned, they're going to do a new TV series. They do computer games, although they don't actually make them, they do the licensing for those, and that's how they make their money. So it's a fantastic little cash generator. It pays out a lot of dividends because they try to pay out what they call truly surplus funds. So it's a lovely little company for an investor. Back to what we're really interested in. Here are the two companies side by side. If we just have a quick look at their snowflakes, they both have these nice little orange snowflakes, which from Simply Wall Street is not a bad thing. Both very, very healthy balance sheets. Both have a pretty decent past. And both have a fairly substantial dividend. Coke has the better one according to Simply Wall Street, although Games Workshop has the slightly better future and much less value. So Coke, slightly less future, better value. Games Workshop, better future, less value. But up to you to make your choice. Apparently Coke is trading at almost 50% below Simply Wall Street's estimate of fair value, while Games Workshop, and they don't show you here, but they are about 50% above. They think it's a very expensive stock, but I believe they're not necessarily taking into account all of the future cash flow that Games Workshops can generate. I think they overcalculate how the dividend is covered by earnings. They don't have massive earnings covering the dividend because they kind of pay out all the earnings as a dividend each time. So those are the two.
Let's take a look at and compare their high-level metrics.
And here they are side by side, along with their 3-year stock graphs, and you can't really see it, it's a little bit small, but just to the right of Games Workshop stock chart, it's taken another little dip, but as you can see, it's gone up a lot recently, so it could be a good time to buy. And I just love Coke's just constantly increasing chart. It has leveled out slightly, but maybe that means it's a good buying opportunity. And at a PE ratio of 25, almost 26, it's not as expensive as it could be, with a nice dividend yield of 3%. Now that compares very closely to Games Workshop, but its PE ratio is 28, so it's quite expensive. Much smaller company than Coke, obviously. However, 4.29 billion market cap is not small, especially when you consider it's a UK company, so it could be a good diversifier. Revenue, also the difference is stark, billions to millions, but it's pretty close, all things considered, between these two.
So there you have it. That's all the info. Who do you think we should invest in? I'd love to hear from you in the comments. And also, as always, if you have a Christmassy stock that's either more Christmassy or a better investment, I'd love to hear about it. Please put it in the comments. But for this week, my vote, and I think we should invest in, is... So all that's left to be said is I hope you've had a wonderful 2024, and I hope 2025 is going to be really, really good to you. Thank you so much for watching. I've really enjoyed putting these together, these short few weeks and months of 2024, and I look forward to doing it all through 2025 and seeing you each week and watching how these portfolios build up. Thank you so much for watching. Have a happy Christmas. Bye-bye.
Goodbye.